Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, lengthening cycles and diminishing returns. It's been a while since we really went through all the market cycle theory. I thought it might be a nice time to do a general update, especially considering that there are a lot of new people to the channel that maybe haven't seen all of these theories yet. If you guys like the content, make sure you subscribe to the channel. Let's go for 500,000 subscribers. Give the video a thumbs up and also check out the Telegram channel, which you can find a link to in the description below. So, we've been talking about lengthening cycles and diminishing returns since 2019 on this channel. The general implication being, expect the cycle to drag out much longer than people expect, and also expect the final returns from cycle bottom to cycle peak to be a lot less than a lot of people might expect, okay? Now, those are two different theories, despite the fact that I have married them. Basically, I've always suggested that they come together, lengthening cycles and diminishing returns. But as we know, you could have a lengthened cycle without diminishing returns. For instance, if Bitcoin went to, say, $300,000 by 2023, then we would say it's a lengthened cycle and no diminishing returns, okay? So what we're gonna do is we're gonna talk about what I think, but then we're gonna say, I'm gonna then lay out why some people disagree with me, and then hopefully you can come to your own conclusions that'll help you better navigate the market. I can only tell you what I think is going to happen. At the end of the day, no one precisely knows what is going to happen. So again, I'll tell you why I think the way I do, and then you can come to your own conclusions after I've explained why I think it and why people disagree with me. So the reason why I think we're going to have diminishing returns and lengthening cycles is, again, if you measure the bottom to the top as well as top to top or bottom to bottom, you'll see that not only do you get lengthened cycles, you also get diminishing returns, okay? The first one, bottom to top, about 70,000%. If you want to go to the bottom of this wick over here, it's closer to, maybe 100,000% gain over 280 days. You go to the next one, it's around 60,000% over 784 days. If you look at the next one, it's even longer, about 12,000% or so, maybe a little bit less, over 1,064 days. Okay, so what do you notice? What do you notice? This was less than 300 days. The next one was less than 800 days. This one was less than 1,100 days. But from cycle bottom to cycle peak, you actually see that the cycles are in fact lengthening. Also, the returns are diminishing. Okay, the returns are diminishing from one cycle to another. Now, you may say, well, why do you measure it from bottom to top? Why don't you measure it from bottom to bottom? Why don't we do that? We can do that as well, and you'll also see the same thing, the same trend emerge. 7,000% or 6,800% or so over 448 days. I should say before we go on, if you were to assume that the current cycle is 1,064 days, then it would take us until November to get there, okay? But my argument has always been, why would we assume that this cycle is going to take the exact same amount of time as this cycle when this cycle was different than this cycle and this cycle was different from this one? Okay, why would we assume that it's going to be the same as the last one? So then that's measuring it that way, okay? Now, measuring it from bottom to bottom tells a very similar story, okay? This is about, 6,000% or so over 400 something days. Then the next one from bottom to bottom is 9,000% or so over 9,000% over 1,190 days, okay? And this shows you that the time between, say, this first one and then the next one increased, okay? It increased. You see it, this one was 420 days. Next one was 1,100 days, almost 1,200 days, right? It was almost 1,200 days. The next one was even longer, okay? This one was even longer, and it was 1,435 days, okay? 1,435 days. So you can see that they're all getting longer. And by the way, if you want to go down to see the bottom of this wick over here, you can see that this would actually be 17,000%. It's just hard to know exactly where to weight things based on the bottom. But if you were to just go say the bottom, it would be around 18,000% or so, and then 9,000, and then like 1,800%. But it's hard to know exactly what is the most accurate, so we can't really fully know how accurate this wick was. Okay, so just one caveat in there. If you do just go to the bottom of the wick, it's around 18,000%. So then you look at these three and we say, well, 392 days, 1,190 days, 1,435 days. If the next bottom were exactly 1,435 days, and these are approximate. I'm not getting down to the pixel here. But if the next one were, say, 1,435 days, then it would in fact put the next bottom at the end of 2022. I've often suggested I don't think the next bottom is at the end of 2022. In fact, I would lean to say the market is probably going to be a lot more bullish than it is today by the end of 2022. I think the end of 2022 and going into 2023 could be a crazy bullish time for Bitcoin, exactly when a lot of people might assume that that's when the market cycle should bottom. So when I look at this, I say, well, why should we assume that the next bottom will be exactly the same amount of days as the last cycle? Well, we shouldn't, right? We shouldn't. There's no reason to assume it because this one was longer than this one, and then this one was longer than this one. So, if we were to extrapolate out a little bit, maybe the next cycle bottom is in fact further out, okay? Maybe it's out in 2023 or 2024 or something. Okay, so we have to recognize that just because the last cycle behaved in this manner does not mean that every cycle will behave in this manner. I think a lot of people operate with recency bias. It happened last cycle like this, so therefore it has to happen this cycle. But a lot of people don't recognize that prior cycles were very different from the last cycle, and it was not a 4-year cycle. The only 4-year cycle, in my opinion, based on the data, was the last cycle. And that is why so many people assume that this cycle also has to operate on 4-year cycles. But I don't think it's a 4-year cycle. I think that this cycle is going to expand much further out than people expect, okay? Now, you might say, well, what if we measure it a different way? What if we measure it in a more dubious way and go peak to peak? Okay, well, this one was around a 3,500% move over 931 days. And then this one was a 1,410% move over 1,463 days. So far, this one has been around 1,218 days. So if we were to match the prior cycle and go 1,463 days, then it would put the peak at the end of the year. But again, why would we assume that the peak has to occur exactly 4 years after the last one when the peak before that did not occur 4 years after the prior one? So then we can go out and say, well, what if the next peak is maybe 1,700 or 1,900 days from the last peak? Maybe it's somewhere out the end of 2022 or sometime in 2023, and then we get some really large macro cycle that when you sort of just glance at it could look something like this, okay? So that's the main question. And this is the evidence, right, that I would look at and say, this is why I think we're going to get lengthening cycles and diminishing returns. It's not any magical potion. It's not, it's not that I want to tell you something that should inspire fear into everyone. It's just based on the data. It's just saying, look at the data. The data suggests the cycle should lengthen. The data suggests that the return should diminish. From here, I should point out that one common misconception is that the two theories have to be married. They don't. We could have lengthening cycles without diminishing returns. Okay, what would that look like? Well, if the price of Bitcoin went to 300K by 2023, then I would say, okay, well, we have a lengthened cycle, but we don't have diminishing returns. Or if 64K is the market cycle peak and we don't put in, say, a new cycle peak until, say, 2024 or something, or 2025, like if we do nothing consequential for the next 2 or 3 years, then yeah, 64K was the market cycle peak. And in that type of a situation, you would have diminishing returns, but not lengthening cycles. You would have had a shortened cycle from the prior cycle. So all we know so far is that if the price of Bitcoin doesn't put in new all-time highs for a few years, then we would have had diminishing returns, and the diminishing return theory will be continuing to stand the test of time. However, if after 2021, over the next year or two, we put in new highs without having to wait like another 4 years for new highs, or a new all-time high, then we could argue that we have lengthening cycles. But then if we get back to lengthening cycles and we put in new all-time highs, then we don't know yet if we have diminishing returns. So it can flip-flop back and forth. Right now it seems like, okay, well, if this is the cycle peak at 64K, we have diminishing returns and no lengthening cycles. But then if we get to the point, say next year, where we're like, all right, yeah, it is lengthening cycles, then we can't be sure if it's diminishing returns until we actually get into the cycle peak, okay? So that is why I think we're going to have lengthening cycles and diminishing returns. Why do people disagree with me? So, and I'm going to try to do their perspective justice. Like, I'm not just going to write them off and say that it's an absurd theory, I think anything other, because it's not. But why do people think differently? Well, some people assume that everything is built around the halving, and therefore the price of Bitcoin has to go up every 4 years on a dime, go put in like a 100x return or something, and then come back down. And this is why a lot of people were touting the $300,000 Bitcoin by the end of the year, is because they were assuming that it would follow a very similar pattern after the as it did after the last halving. What I feel like they failed to consider was the fact that the return after the last halving did not match the return after the halving before it. So the idea that this halving would match the last one is very dubious extrapolation, very dubious. Okay, why else do people disagree with me? Well, extrapolating from 3 data points is dubious in and of itself, and I would agree with that. The problem is that that's all we can do, and if it were simpler, then we wouldn't have to have all these videos and arguments about it. There would be a lot more clear-cut method. But even then, I have a hard time envisioning a clear-cut method, because at some point the market will adjust to whatever the broader market identifies as what's happening. So I would say that, yes, are we extrapolating from very few data points? We are. And is that enough reason to completely disagree with the model? Well, I think it's enough reason to be cautious, okay? I think that because we're extrapolating from only 3 data points, it's enough reason to be cautious and not be too deterministic about anything. And never let a good bubble go to waste, as we always say. So don't be too deterministic about anything. And hopefully that, I'm hoping the lengthening cycle theory and diminishing return theory plays out. But with that said, I always say don't let any bubble go to waste. And again, we do have the premium list into thecryptoverse.com where I tell people what I'm doing. On this move up here, I sold 87% of my Bitcoin that was in long-term capital gains territory, 87%, because it goes along with the idea of never letting a good bubble go to waste. Like, even if it does trend back up, I will want to take profits during any major move, okay? And then as it comes back down, I can load back up, right? Whether the bottom's now or the bottom continues to fall out for a while. But then that's when you load back up, is during the bearish phase. But never let a good bubble go to waste. So then, if you didn't take profits, or if you FOMO'd in up here, then I believe that lengthening cycle theory at this point is probably your best bet, right? That's probably your best bet. And if you're new, my general thinking is that the cycle peak could be it could be in the summer of 2023 for all we know. And it's going to take a long time for us to get there. From a fundamental perspective, as I've mentioned, I think institutions need time to come in. Like, they can't just all FOMO in 2021 and we just saw everyone sells at the end of the year. We all meet back in a year, sing kumbaya, and do it all over again. I don't think that's how it's going to work. I think that institutions need time. And they need a lot of time to actually think about buying Bitcoin, to then buying Bitcoin, talking about it, doing it, buying it. It takes a lot of time. We had Michael Saylor on the show, and he told us, how many months it took, depending on if it was a public or a private company. So remember that these things take time, and not to expect things to happen immediately. One of the things I like to do is I like to overlay the cycle ROI so that you guys can better visualize what I'm talking about, okay? So if you overlay, again, the cycle ROI, you'll see that we generally get these lengthening cycles and diminishing returns from one cycle to another. And we've seen this happen 3 times in a row. And the argument that I put forth on my YouTube channel, even in February, March, and April when Bitcoin was crazy, I said, guys, just because it was over, ahead of cycle 2 earlier on doesn't mean it's going to keep pace. Just because it was ahead of cycle 3 over here doesn't mean it's going to keep pace. Therefore, the path of least resistance is to come below the last cycle and then to continue on, okay? And then ultimately we'll have something that looks like this, right? Where maybe we come out and put in a cycle peak, somewhere over here or something. But we need a lot of time, okay? And again, the cycle peak could extend farther out. Now, another reason why people may disagree with me is because, well, if you go back to the last cycle, let me leave those cycle ROIs on here. If you go back to the last cycle, we actually had a summer lull as well, but it really wasn't nearly as bad, okay? I mean, we dropped like 40%, but we were basically at new all-time highs within, a little over a month or so, maybe a month and a half, because we put in an all-time high here on June 12th. We reached that price again at the end of July. Okay, so it was a pretty quick recovery, and we also held support on the 20-week SMA, which is what we said we need to do in order for the bull run to not lose its confidence. Here, we've actually fallen below it, and we're in a downtrend. So the other reason some people might disagree is to say, well, this time 4 years ago, we also had a pullback in the market. We did, but the market conditions were very different back then. We were actually still above the 20-week SMA, and it only took us a month and a half to get back above it. Now, we've fallen, a lot more than that. We've fallen about, at the current price, around 53%. At the local bottom so far, 56 or 55%. But right now we've fallen 53% over 77 days. So remember, the last time, 4 years ago, we were able to put in new all-time highs in a month and a half. Now we're looking at we're looking at around 2.5 months, and we're still trending down. So I think it's not a fair comparison to say that it has to follow that cycle exactly. Okay, so those are the main reasons why I think we're going to have lengthening cycles and diminishing returns. And again, the main reasons that people disagree with me are the idea that we have to go up after every halving. They also would disagree with me because I would say that they look at the last cycle and say that was a 4-year cycle, therefore this cycle has to be a 4-year cycle. The other reason why people may disagree with me is because maybe they lump this first cycle, what I would consider to be the first cycle, maybe they lump it in with this one, and then they just call this whole thing one cycle. Okay, that could be another reason they disagree. There's plenty of reasons why people may disagree with the theory. And it's because of these reasons that all of these various theories exist. My speculation is that no single theory will tell this, will ultimately be able to get things exactly right. My guess, as I've said, is I think the cycle peak will be between 100 to 200K. Probably not for, could be very unlikely to be in 2021. That's what I've said. Is it possible that 64K was the peak? It's possible. Is it possible that we don't have diminishing returns and we go to 300K in a year? Yeah, it's possible. But I've laid out why I think we're going to have lengthening cycles and diminishing returns. And I've also laid out why people disagree with me. And therefore, hopefully, you can take that information and form your own conclusions. You don't have to agree with me, right? You don't have to agree with me. You can disagree. But I just want to present the data and tell you why I think the way I do, why other people disagree with me. That way you can come to your own conclusions, all right? My general thinking with the cycles is as long as we're in this general uptrend as we leave the bear market, we're sort of, I would say we're sort of in the same cycle. And as long as when we break that trend and enter a long accumulation phase, you could definitely argue that it separates one cycle from another. And so far, I think that even if you draw these trend lines out, you can see that our trend angles are becoming smaller. And as we continue on through time, we're slowing down. The cycle peaks are taking longer to get to, and they're diminishing from one cycle to another. My general speculation again is as I said all the time, it's summer of 2023 plus or minus like 6 to 8 months. That's when I think the cycle peak will be. Obviously, I could be wrong, but I want to make sure that I've communicated that fairly clearly. It could happen as early as next year, right? It could happen as early as next year. But if it did happen next year, I don't think it would happen in Q1, probably not Q2. Okay, probably not Q1 or Q2. If it happens in the first quarter, you could argue that it's closer to a 4-year cycle than it is to lengthening cycles. So I don't think it'll happen in the first quarter. Maybe later on though in the year. Hopefully I've been able to communicate why I think the way I do, especially if you're new to the channel, and why I think that we just simply need time. Also, there will be people to say that, of course there's going to be people that say that this is the cycle peak, even if we do go to 150K within a couple years. They'll say that's a new cycle. That's fine too. To some degree, it's all semantics. My general thinking is that 100 to 200K by 2023, plus or minus 6 to 8 months, and that's what I think, right? That's generally what I think, and the route we take to get there is anyone's guess. My guess is that the next few months are going to be critical in deciding exactly how long the cycle peak is away. Okay, because if we end up coming back down and we have to grind out for a while, and then we do something like that, then I feel like the peak could easily be in 2023. Okay, I mean easily if we do something like that. If on the other hand we sort of hold the line at 30K and start to trend up before the end of the year, then maybe the cycle peak can come in, say, the middle of 2022 or something. I certainly don't think we're going to go to $300,000 by the end of the year, which I know is very popular amongst other models. There's also the stock to flow model. I know a lot of you guys follow the stock to flow model. I think it's suggesting like a $288,000 Bitcoin by the end of the year. But again, I strongly doubt that is going to happen. But again, time will tell. Time will elucidate the truth, and we'll see. We'll see which model is able to hold up the best, I guess. And I mean, so far, there's still a lot of uncertainty in the air because anything can happen. Don't limit Bitcoin. I've done it in the past myself, and if you limit it, it's a good way for it to defy your expectations, right? It's a good way for it to defy your expectations. Again, I would assume the way I think the way to operate in crypto is to be very, very conservative and then be pleasantly surprised when things outperform. So for now, I would say, hey guys, probably going to be closer to 30K than 300K by the end of the year. And from there, we'll have to continue to slowly trend up. So I think most of the models would agree that Bitcoin should trend up with time. It's just a matter of how long it will take us to ultimately get there. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Also check out the premium list at intothe-cryptoverse.com if you want to know how I am navigating these markets. Remember to click the bell icon to turn on notifications, and I will see you next time. Bye.